Hey everybody, Rob with WePayOffDebt.ca coming at you today to talk about tax refunds. Now, I'm recording this in April 2021, and we just recently got our tax refund. Our tax return got done a couple weeks ago, mid-March or so, and we got the refund. Now, I wanted to talk to you because you may not realize tax refunds are actually a bad thing. I'm going to talk about why in a sec, but please, before I do, make sure you go ahead and subscribe, go ahead and like and hit the bell so you get notifications when new videos go. So, a tax refund. Now, let me share with you first off how taxes work. In Canada, the way this works is you get money taken off your check every month or every paycheck for your taxes. Now, they don't quite know at that time how many taxes you're going to owe, because taxes are quite complicated. And if you have tuition, you end up getting a tax credit for that. If you have child care expenses, you get a tax credit for that. If you put into RRSPs on your own, even though your work has no connection to it at all, you get a tax credit for that. And so you end up lowering the taxes you owe. So what happens in 2020 is your workplace took off what they thought was the appropriate amount of taxes to take off for you. And there's regulations about how much they're allowed to take off and how much they need to take off. And so now fast forward, they took off those taxes in January and February and March, all throughout 2020. And now in 2021, the entire year is in your rearview mirror. You've got all the paperwork, you get all the paperwork together, you take it, you do your taxes, and now you figure out at that point exactly how much taxes you owed in 2020. And for most Canadians, if you have a regular job, you're not self-employed, these kind of things, for most Canadians, that means that you actually paid too much taxes in the last year. And therefore, you are due a refund. And that's all a tax refund is. It is not a Christmas present. It is not a gift from the government. What it is, and I'll use some round numbers to illustrate this, is giving you back your money. So here's the example. What if you got a $3,600 tax refund this year? Okay, $3,600, $3,600. Think about what that means. Well, that means that in January of 2020, taxes were taken off your check, and it was taken off $300 too much, because the amount of taxes you owed in January was $300 less than what you actually paid. And then you did it again in February. Your job took off $300 less. I'm sorry, I said that wrong, backwards. They took off $300 more than they needed to. Because at the end of the day, when it comes down to March 2021 or April 2021, whenever you get your taxes done, you get that $3,600 refund. $3,600 divided by 12 is $300 a month. So in January of 2020, you overpaid your taxes by $300. In February of 2020, you overpaid your taxes by $300. You're like, I know I owe this, but here's a little extra. Just keep it a little for yourself. And I'll get it back from you later. Okay? March, $300. April, $300. May, $300. June, $300. Now you tell me, as you were going through that pandemic, would $300 every single month more in your budget have been a nice thing? Yeah, it would have. Would have been nice for me too. Okay? So if you get a $3,600 refund, what that means is every single month for the entirety of 2020, you paid $300 too much in taxes. And you gave it to the government. You said, here, enjoy. Then a whole almost a year, or over a year, depending on what month we're talking about, but from January 2020, more than a year till March or April 2021 is when you do your taxes. And you know what? The government says, oh, you didn't owe that $300. Here it all is back. And so you end up getting $3,600 in back. So when we were not in good control of our finances, when we were just trying to scrape by, I actually love this plan. In fact, I specifically planned to get my business, my job, to take off the maximum amount, the biggest amount they're allowed to take off. And the reason was because I loved getting that big tax refund. It felt like a big surprise. It felt like a big shock. But now Now we're at a place where we're actually in control of our money. We are budgeting every single month, and we are tracking where every single penny goes. We are watching to make sure that our money goes in the right place. And so I want my money. And maybe you're in the same place. Maybe you're on baby step 2 and you're trying to pay off debt, and you're looking and you're squeezing out $25, $50, $100 towards your debt every month. And you're looking at this mountain, you're saying, oh my gosh, how am I ever going to get out of debt? And now you realize that you actually overpaid your debt. You overpaid the taxes by $300 a month. If you got if you only got $3,600. I know many people who have gotten larger tax refunds than that in the past. And so if you only got back $3,600, that means you overpaid your taxes by $300 every single month. That's money that could have gone towards your baby step 1. I mean, that's 3 months and baby step 1 is done just from that, right? That's money that could have gone on your debt. And what ends up happening, unfortunately, is we get our taxes back in the next year, and it gets even worse here, because what happens is, and this is what we would do before we were really in control, is the money comes back. It feels like found money. And so I don't nearly put all of it on a debt. Maybe we just use it all to buy something that was important to us. We go on a vacation, or we buy some big gift, or we replace our car, or whatever, right? There's any number of things people do with it because they get this large chunk of money, and it feels like, oh wow, this is a really good thing. I'll put half of it towards debt. But here's the thing. If you had $300 every single month, would you have put $300 on debt every month? Yeah, you probably would have, especially if you were really excited to get out of debt, especially if you were really excited to see that debt gone, right? So this is the thing. Tax refunds are not a good thing. Tax refunds means you did not get the appropriate taxes taken off, and therefore you let the government hold your money for, if it was January, we're talking about 15 months, 16 months, and then they give it back to you with no interest. They just held on to it, and they used it for their own purposes, right? But then they give it back to you, and they give it back to you with no interest. That's a bad, bad savings account. That really is, because I could have very easily just put $300 of my own money into a bank account, and at least it would have been there. Or I could have put $300 into some mutual funds and been investing that and made interest on that money. Instead, the government got it. So there's a couple of methods that you can go about to getting this back. So the first are the TD1s. TD1 forms are the forms you fill out when you get the job, get a job, right? So there's a number of fields on there. I'm not qualified for anything on that list. Nothing. Yet I still get a big tax refund. So what's going on is the other stuff. So things like childcare expenses, things like tithing at church, things like pension contributions, RSP contributions. These things do not show up on those forms. And so you use the other one, which is the T1213. And this form, when you fill it out, it's quite a complicated process, it seems. You fill it out, and I've been trying to do this for 5 years. And it hasn't gone perfect, but it's gone pretty good. You fill it out and you send it off to the CRA. They take about 2 months to look it over, and then they send you back, if they approve it, a letter that you then can take that letter to your human resources department, and they can now are allowed to take off less taxes. Okay, so it's quite the process, but it allows you to get the money back sooner. And we just did that this year. We got a significant bump in our pay by doing that, and so we're gonna get a less of a tax refund next year. It's every year I've done this, I've still gotten a tax refund every year. So it's not that I can get everything back. It's like I'm happy if I can get sub $500, and I haven't ever done that. I don't think one year. I think 1 year I got under $500 back. But it's the government makes it pretty hard. So and the reason is because they don't want Canadians owing. I did some research into this, and what it looks like is there's some historicity here where the government actually does not want to be in the tax collection business. They do not want to have to hire a bunch of people to actually go out and get people to pay. Instead, they would rather just have your money and give it back to you. So yeah, that's how it goes. And hopefully that gives you a little bit of an idea how taxes work in Canada. It's not this super complicated thing, but it is something to be aware of. It is something to think through, and it is something that's a bit of a pet peeve of mine because, like I said, I'm getting these tax refunds and I want my money sooner. I'm going through all the government's hoops to try to get my money sooner, and they're not making it easy, but it is working to an extent. So definitely check that out. If that is something you're interested in, please do shoot me up an email, rob@WePayOffDebt.ca. I would love to offer whatever help I can in getting that done for you. I will put a link in the description of this video for another resource on this, and you can definitely go check that out. So hope you found that useful. Have a good one. We'll talk to you again soon.